Welcome to another episode with Loans Elevated. My name is Broch, top 1% loan officer nationwide.
And I'm TJ Heidenreich. Together we bring the latest news, strategies, and insights in the mortgage and real estate industry.
Okay, we're back, and today we're talking about a topic that has exhausted us for an entire year, and that is mortgage rates, where they're headed. The exhausting part for us and our clients, home buyers, has been, I heard an interesting stat this week that the rate markets or the bond markets have had their worst period over, I think it was a 12-month span, the worst drop in prices in the bond market, which means higher rates, since before the U.S. Treasury was formed in 1789. So we've literally experienced unprecedented times
That's
over
a new
the past
stat for
year.
me. I didn't even know we could track it that far.
Agreed. I was blown away when I heard that. I haven't validated it, but it came from a very reputable source. And it's been exhausting. A lot of this is because of inflation, but it's also because of what the Fed was doing before inflation hit and how long they were aiding the markets with artificially low mortgage rates, really, and it kind of just snapped, which was stressful. But we're finally making it out of
and we knew we knew we had the battle in front of us, but I don't think we didn't think it was going to hit that quick.
No, I don't even know if we thought it would hit slower. I think what we anticipated is we expected the path to go the way it did. We just didn't expect the high to be as high as it was.
Right.
Because I've talked to multiple clients that are now getting, they're building homes or whatever, and we've been talking about this for a year.
Right.
And what we have talked about has been the case, which is we think rates are going to go up. We think inflation is going to start coming down with that, and possibly a recession. With that, rates will start coming down. That literally has happened.
Now we're on the flip side, and now looking ahead to this summer, it's flipped on its head. It's the exact opposite.
And hopefully it works in our favor,
Right.
as hopefully the extreme is now in our favor.
Right.
We'll see what happens. But
exactly.
So we follow closely MBS Highway and Barry Habib. He gives us tons of information that helps us guide our clients and helps us make the best decisions for them, or help them make the best decisions for themselves, I should say, in our business. And there's a very inspiring date that he has marked on the calendar that we're paying attention to. We wanted to share with you guys. Teach, talk about what the date is and why it's so important.
Well, I mean, the last time he told us to circle a date on our calendar was, he told us on November 10th. And then he probably told us 6 months before November 10th to circle that date. And when November 10th hit, we saw the bond market rally in ways that we hadn't seen before. In fact, it was the second best day for rates in history of rates. Rates improved by just over 1% in a single day. So he told us to circle May 10th. We really like the 10th.
Now, just so you know, this aligns with inflation data coming out. That's why it's landing on the 10th. But
it's usually, the second week. I think it's the second Tuesday.
I can't remember exactly.
It's second Tuesday or second Thursday, of the month. We get an inflation report. This one is going to be showing shelter costs. And reason why that's important is because for the past 6 months or so, inflation reports, I guess, since November 10th, inflation reports have been in our favor. All the numbers except for one variable in that inflation report, and that is shelter. That's going to be like our rents and whatnot. They've been high, and based off the report, and we'll put this graph up here so you guys can kind of follow along. But on May 10th, we should see that number come in our favor, and we'll see both inflation coming down and that shelter number coming down. So the stars will align, and we should see a really good day for rates.
Yeah. So the call is this: we think inflation will continue coming down, and as we've been saying for a real long time, as inflation comes down, rates will come down. It is happening, has been happening for months, basically since November. Again, like we mentioned in the very beginning, we just didn't realize how high rates were going to have to go before they started coming down, and that was a variable that was missed. Now, hopefully they come down further than we expect, but we expect rates to continue between now and May 10th. We think that the rates are going to continue getting better. Inflation's going to continue being lower. This May 10th date is a significant date because, like TJ was saying, the inflation number is continuing to come down, but the shelter number is not allowing the number to come down as far as it otherwise should with all the other costs.
Right.
So this will be a massive decrease. So we expect hopefully a repeat of what we saw in November, which means we could see, I mean, who knows? We're totally guessing here, but if the markets react similarly, we see another 0.75 of a point to a full percentage point in mortgage rate decreases, which will really, really change the landscape of what we're seeing in the market.
Yeah.
Maybe we should touch on how critical this is, knowing this, and maybe there's a strategy to buying before that May 10th date because of how it's shifting what we're seeing in inventory and the opportunity we see. Once that date hits, the opportunity is going to be gone.
It's already gone. Yeah. Well, reason being is because, I mean, if rates are improving by a full point, well, let's just say, just for even numbers, the affordability is, I mean,
on an average house, we ran this earlier today, it's a little over $300 per month, like $350 per month in savings if rates drop by a point. The equivalent on purchasing power on that $300 a month is like an additional $75,000 to $80,000 on home price for the same payment. Yep. So it's going to change the landscape. It really
opens up the floodgates for everyone that's waiting on the sidelines, and inventory is already shrinking. So when you add rate drop on top of that, we could start to see inventory really decline fast.
Well, it could be another like COVID era situation. So we heard a stat this morning. It's a national statistic, but the stat is that there's only 2.6 months supply on the market, including under contract properties. When you strip out the under contract, because those really that's not inventory. You can't actually buy it. When you strip that out, there's only 2 months supply on the market. Now, a normal market, there's like 4.5 to 5 months supply. So we're already very low inventory. And we have, I mean, just you and I, literally have hundreds of people sitting on the sidelines that haven't pulled the trigger, are just waiting for rates. They're starting to pull the trigger now. And I can only imagine if rates drop into their full point from where they're at today.
Oh, definitely. And it's important to note that it's not going to be a perfectly straight line down in rates. We're going to see 2 steps forward in a positive direction, 1 step back, just because of technical charts and the way that inflation's set up from last year. For example, we might have a headwind in March, and it'll report a month later, so April, because we had a really low inflation number from March of last year. So it's not going to be a perfectly straight line, but overall, it's going to be, I mean, rates are heading in our favor.
Yep. And I think the opportunity, just to underscore that, I don't think you should wait for it. I think the opportunity, like the negotiation power, we've put some things on social media on this recently as well. Negotiating power is massive right now. So you may as well get in, negotiate heavily, and bank on what we're seeing is what we've been calling for a long time, and it's actually coming to fruition. The guy that we follow is one of the most well-trusted economists in the world, especially as maybe the most trusted.
Literally
in
wins
the world.
The crystal ball award.
Yeah,
like multiple times.
So we're calling all this stuff like there is an opportunity to not only lock in a low price, get your closing costs covered by the seller, all these things, but then shortly thereafter refinance to a lower rate, and you get your cake and you get to eat it too in that circumstance. So I think it's a good opportunity. But anyway, anything else you have to close?
I mean, and as this is being recorded, cross country, we're rolling out a buy now and refinance later program where we basically we'll pay for your refinance in a sense when you refinance down the road. It's $1,500 towards your lender fees. Which virtually covers all your lender fees.
Virtually covers all lender fees, and that's if you buy between now and I think April, and you refinance any time in the 3 years after you buy.
Correct.
So it is a really good opportunity. Enables you to get into a refi for very cheap, if not potentially free, and a huge incentive. So I'm glad you brought that up. But anyway,
cool, awesome, guys. We'll catch you on the next one. Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.